This video, I want to do something a little bit differently. Normally, I'm going over different strategies or showing recaps or kind of doing market analysis on different, indexes or particular stocks. But, one thing that we really don't focus on a lot on this YouTube, which I do focus more on in the Discord at Evolution Traders and working with my traders one-on-one, is building out a trading plan that's accustomed to you, right? So I think personally, right? I think personally that a lot of traders who are either new, just starting off, maybe not that consistent or not that successful yet, tend to kind of gravitate towards what's hot. Whether that be the hottest strategy, the hottest YouTuber, the hottest, social media influencer, whatever's going on, right? The hottest stock of the day. What is everyone shorting? What is everyone going long on? And I think realistically, that's a very, very bad place to start because it can lead to bad habits, okay? Because in the beginning, when you're just starting off and you're very, very new, or even if you've been trading for quite some time now and you have not found that success that you've been looking for, okay? 9 times out of 10, it's because the building blocks and the foundation of you becoming a successful trader were never really implemented from the start. So depending on who you're learning from, which, where you're getting your resources from and how you're actually executing the trades when you're first starting off, right? So we could only imagine, if you imagine an infant baby, when they're starting to crawl and to walk, they don't just get up and start running and going and playing sports and doing this and that. What they do is they start to crawl, and then you have to hold their hands and help them take their first couple of steps. And then as they start getting a little bit more comfortable, maybe they're using like a little toy walker where, it's enabling them to build a little bit more strength. And then one day, all of a sudden, you just see that little toddler get up and he starts to run on his own. Yes, maybe they take a fall, maybe they look a little bit more clumsy, but over time, they can then perfect, using their muscles and running and walking and doing everything on their own. And that's the thing that you need to think of as yourself as a trader. As a trader, we don't just get up and start making the big bucks. We don't just get up and start making $1,000 trades, having 6-figure months or multi-6-figure years. It takes a long time. By the time you're actually watching some of these traders who are posting very, very big P&Ls or very, very successful, you have no idea how long it actually took for them to get there. A lot of traders will tell you it takes 2, 3, 4 years. Now, mind you, 2, 3, 4, 5, 6 years ago, the education on YouTube, the education that you can find in these trading communities or courses wasn't as readily available. When I started trading almost 8.5 years ago, the content was very, very limited. I had to go out there and personally find a mentor, personally find a trading buddy, personally find someone who has done this for years and years and years before I even came into the markets and kind of learn what works and what doesn't. So setting up a trading plan is going to be the number one thing that I would say any trader needs to kind of, instill in themselves. And if you want to be a good trader, some of the things that you're going to need to include on your trading plan is what you need to actually figure out is how big is your account size, okay? And this may sound very cliche or very, very basic, but it's very, very important. And this is one thing that I will ask a lot of newer traders that come into my room is, how big, full disclosure, how big is your account size? So account size is going to be number one. And why this is important is because it's going to dictate and let us know how big we can actually play. For example, if you have $1,000 account and you want to trade options, I am not going to recommend options like Nvidia, okay? I'm not going to recommend options like Tesla. Some of these options can cost $400, $500, $600 a contract, depending on the day and the premium and the volatility and the IV. So if, for example, you see someone trading Tesla and you see them making, let's call it $1,000 a trade, you don't know how much money they're actually putting up. Did they buy one contract and did this contract go up 100%, 150% from entry? Is it out of the money? Is it in the money? Did they take 10 contracts, right? So a trader with account size of $1,000 starting off trying to trade stocks like Tesla or Nvidia, one bad trade, right? Because we have to understand that, you know, trading is a game of probabilities. We have an edge as a trader with our strategy, but our strategy is not going to work 100% of the time. So if you don't have money to stay in the game and continue to take calculated risk trades, then you're going to be out of the game very, very quickly if you're sized too inappropriately. So some of the stocks that I would recommend to start trading if you have an account size of, let's say, $1,000 would be maybe something like Apple, that maybe those contracts are going to go for $100 or $150. Maybe you want to play a little bit of the semiconductors and you can't really afford to take on the risk of trading Nvidia. I would look at things like AMD or things like MU. Some of these stocks cost a lot less, the premium is a lot less, the moves are a lot less violent, but if you do catch a good move on these stocks, you can definitely make a nice piece of coin. Some other stocks that I might recommend if you want a little bit higher risk appetite would be something like UPST. You know, you can trade something like PayPal, right? You can trade things like, what else is out there? What else is out there? American Airlines. You can trade things like Royal Caribbean. You can trade things like Nike. You can trade whatever it is that your heart desires. However, we want to make sure that if we've got $1,000 account, that we are playing options that are around $50 to $100 a piece. Okay. And the reason for this is because we can afford to take one loss, okay, two losses, and it's not really going to affect our account size. It's not really going to affect our trading psychology and put us down in the dumps. But if we go with $1,000 account and we start playing 0 days till expiration SPX contracts that are going to cost $800 a pop because you've seen someone on social media who bought one contract that, you know, doubled in size and they took $1,000 to $3,000 in one trading session, but you're on the wrong side of the probability on that particular trade. You get panicked, you freeze, you don't know when to get out of the trade. You can lose that $1,000 very, very quickly. So in the beginning, I would definitely say account size is very, very key. Depending on your account size is going to depend on the instruments and the assets that you can trade. Make sure that you're staying in your bubble. Make sure that you're staying in your lane. So again, with account size, we're also going to need a strategy, okay? Now there's a million different strategies out there. I teach about 3 or 4 concrete and solid systematic strategies that are going to require a technical reason for entry, and they're going to also require a technical reason for exit. The reason why I am a systematic trader is because, for example, I need XYZ to happen in order for me to get into the trade. If that doesn't happen, I'm not going to sit here and say, well, I feel like the market's going higher today. You know what? I feel that we're overextended today. RSI is telling me that we're overbought today. Let me tell you one thing. How many times have I seen an RSI that is showing overbought and we are just getting massive options flow coming through, big out of the money bets coming in for weekly expirations, and guess what? That RSI continues to stay overbought for quite some time, and you can really go into a deep dark hole and lose a lot of money if you are not kind of monitoring your actual trading strategy. So again, it's not about a feel, it's about technicals. We need something technically to happen so we can technically take the trade and technically get out of the trade. I want you guys to keep that in mind. So strategies, if you guys are looking for a strategy, join evolutionsTraders.com. I will help you guys get set up with my strategy. The next thing is going to be discipline and focus. So we want to stay focused. What does that mean? Without discipline and without focus, you're going to be all over the place. We can't be adjusting our strategy every time we lose. Again, you guys need to understand that trading is a game of probabilities. So probabilities, what that's going to mean is that not every trade's going to be a winner. Okay, some of the best traders that I know win at 40 to 50% of the time. But guess what? Their loss is very small and their winners are very big. We don't need to have 100% hit rate to be a successful trader and to remain in this game. It's a game of probabilities. So we have to kind of adjust our mindset to understand that we will lose. Okay, and I really want everyone to focus on that comment. We will lose. Okay, There is no way to get around not losing, okay? The sooner that we can get comfortable with taking and cutting those losses, the sooner we are going to be on the right path to be more consistent. This, my friends, is probably one of the most hardest things to do when it comes to being a successful trader. It doesn't matter about the strategy. It doesn't matter about what you're playing. It doesn't matter about how big or small your account size is. If you lack the discipline and the focus to understand that losses are a part of this game and you're going to take a lot of them, and especially in the beginning when you're still working on your strategy, working on your entries, working on when to know to take profits, it can really, really affect you emotionally. Also, I've been speaking about this a lot lately and doing a lot of studying and a lot of research on different types of traders, including myself, people who have been doing this for a long time, but trying to get the questions answered as to why we react in the actions that we do once we're in a trade. So there's two sides of the brain. There's a logical thinking part of the brain, which is the side of the brain that when you're sitting at home and the market's closed and the candlesticks are not moving and you're looking at the trade setups and you're looking at the chart patterns and you're looking at the price action, you can identify, hey, I would have taken a trade here. I would have placed my stop loss here. If the trade went in my favor, I would have made XYZ. It's also the logical part of the brain that is going to help you understand that, hey, if I can take, X amount of trades and just only lose this amount of money, I'll still be able to have money and continue to stay in this game. However, the bigger portion of your brain, which is the emotional side of your brain, is actually what controls our reactions and actions when we are inside the trade. Everything changes once you click buy. Everything changes once the candlesticks are live, and that emotional side of your brain starts to overpower the thinking and the logical side of your brain. So a lot of newer traders don't really know how to control that, and that's what leads them to going on tilt. That's what leads them to over trading. That's what leads them to losing trades and then lacking confidence in taking the next setup, because the emotional side of the brain is the side of the brain that goes all the way back to the beginning of time and evolution of humans, where we don't want to lose. It is fight or flight. So we need to protect ourselves at all costs. And when we're losing money and we're in a trade, your brain is looking at that as a risk, as something that is not good. It's foreign, it's stressful, and you need to understand that you have to be able to coexist with that side of the brain and coexist with that side of the thought process. We have to maybe take a break. We have to maybe walk away from the screens, or maybe we just need to set a stop loss and a take profit and completely turn off the computer screen. So either we're going to take profits or we're going to get stopped out. Whatever it's going to take in the beginning to get you over that hump is what you need to do. So again, understand that you will lose, and you will lose a lot. The sooner you know how to learn how to lose, the sooner you're going to learn how to win. Also, I would say sticking to the same assets and instruments. We don't want to constantly every single day be looking for the hottest stock of the day. For example, 60 to 70% of my P&L on a yearly basis comes from two stocks. Those two stocks are going to be Nvidia and Tesla. I look to trade these stocks each and every single day. I know their average true range. I know what I'm looking to get off of a specific trade on my specific account size. I know that if I can get $1 to $1.50, I'm going to sell at least 70, 60, 80% of my position. I'll always hold a couple of runners just to kind of see how well they play out. If I get $2 or $3, I know for example, I'm always going to be taking those profits. Sometimes I take profits too early and the stock continues to run another 3 or 4 points. But guess what? Me being able to identify that I can come into the market and take 1, 2, or 3 points each and every single day collectively between a handful of stocks is all I really need. And it's all anyone really needs. So again, write out a detailed trading plan. Do you have a strategy? Does your strategy have rules? Write those down. understand and tell yourself on a daily basis, you are going to lose. You will lose trades. And what are you going to do when you're in a losing trade? You know, for a long time, when I woke up in the morning, I was expecting to lose money. I was expecting to lose the trade. And I would already play out that situation in my head a million times, 1,000 times. So I would answer myself the question is, if I take this trade and I lose, what am I going to do if it hits my stop loss? Am I going to adjust my stop loss, or am I going to just click the sell button and look for the next trade? I already play out these situations in my head thousands of times. So that way, when they do happen, I can now think with the logical part and the thinking part of my brain versus just letting the emotional sides take over. Now, again, I am a human. Sometimes it does take over. Sometimes it will take over. And a lot of traders think that you're going to one day wake up and be a perfect trader. Your strategy's never going to lose. You're never going to lose money, and you're just never going to feel anything when you're in a trade. That is just absolutely not going to happen. You will always have those thoughts. You will always have those emotions, but it's learning how to deal and exist with them that is going to make you a better trader. Again, if you guys found this video helpful or useful, and you guys would like more information, you guys would like to learn my strategies and learn my thought processes and my trading mindset and psychology, maybe you guys want one-on-one coaching to perhaps trade live, definitely check out the first link down in the description box below. I will see you guys all in the next video. Make sure to like, comment, and subscribe. And until next time, peace.